Hello, and welcome to this ByteTree Bitcoin and Gold in 2024 Meet the Managers webinar. It's a thrill to have you here, and particularly our guests. I believe that the three of us are the only pure Bitcoin and Gold fund managers in the world. That might not be true. Apologies if there are others out there. Get in touch for the next one. But basically what we've got here are Larry Lepard from Equity Management Associates in Boston, the United States. And we've got Mark Valek from Incrementum in Liechtenstein. Now, both these gentlemen have got completely different approaches to how you invest in Bitcoin and gold, and we're very much looking forward to hearing what they have to say. So, Larry, starting with you, could you tell us about your journey with Bitcoin and gold and what you do in your fund?
Yeah, sure. Thank you, Charlie. First of all, thank you for having me be a part of this. One guy we should probably have in the future is William Middlecoop, because I know he's both a supporter of gold and gold stocks and Bitcoin. But other than the four of us, it tends to fall into a couple of camps. You got the Peter Schiffs of the world, and then you got all the Bitcoiners. But so before Bitcoin even existed, I was a sound money advocate, and going back as far as the 80s, 90s, and 2000s. I got radicalized. I became a hardcore sound money advocate in 2008 when the GFC indicated to me with absolute certainty that the governments were determined to destroy fiat currency, and they're going to do a really good job of it. And so I pivoted and became, I had been a venture capitalist before that, and I pivoted and became a manager of a fund that does just gold and silver mining stocks in 2008. And of course, the white paper came out at the same time. I wasn't aware of it. I kind of saw it develop, and my concern was always that it wasn't going to work. There was eCash and DigiCash and eGold and B-Money and Hashcash, and Xabo did BitGold. I mean, there'd been a lot of attempts at doing digital gold or internet-based money, and they'd all failed. And so when I first heard about Bitcoin, I thought, oh, here's another one. This one's not going to work either. And of course, I was wrong about that, but it took me a while to figure that out. And in 2013, after I saw it go through a couple of cycles, an increase in value, and Coinbase came public, I bought some, and I started down the rabbit hole of understanding Bitcoin. And so, but meanwhile, I was still managing the gold fund with zero Bitcoin in it, and that was my core business. I've got a couple hundred investors all over the world, high net worth individuals, institutions that are looking to make money in gold and gold stocks. And but over time, my confidence and conviction on Bitcoin grew, and I started taking a small position in the fund in Bitcoin, which actually, when you start low at a low price, it grew to become a larger position because we were buying it, in the thousands of dollars, not in the tens of thousands of dollars in the beginning. And so now Bitcoin is about 12% of that fund, and then there's some Bitcoin private companies that are in that fund as well. So. But I haven't totally abandoned gold. I still believe in gold, and gold will continue to do well. And gold stocks, I think, are deeply undervalued, and it's a real opportunity there. But I've also pivoted. I mean, in the sense that I can see what's going on with Bitcoin, and it's more volatile, but it's the faster horse in the race, as Paul Tudor Jones says. So I've got a foot in each camp, but a strong belief that Bitcoin is going to be a better performer from an alpha generating point of view, albeit at the cost of higher volatility.
Thanks, Larry. Now, there's quite a lot of things I want to come back at you with, but I think that we're going to get through the questions and hopefully the audience questions, which will come up in about 25 minutes. So hopefully the audience, if you do have questions, start thinking about them and put them into the room. Now we're going to move to Mark Valek from Incrementum, and I've known Incrementum for a very long time. Geniuses in the gold market. Mark, tell us about your fund.
Yeah, thanks also from my side, Charlie, for the invitation. My name is Mark. I'm founding partner of Incrementum, which is a wealth management company based in Liechtenstein, Europe. I think probably the publication which we may be best known for is the In Gold We Trust report, which is an annual publication about gold, but not only gold, monetary policy, geopolitics lately also has been more important, obviously, which we've been featuring. And also, since 2016, we have been including a chapter on Bitcoin each year. And we invest, we have different strategies. So our initial strategies, which we still manage, are basically, I'd say, rather classic inflation strategies, inflation hedging strategies, like focus on commodities, real assets. And privately, we've discovered Bitcoin also relatively early, I'd say, and we try to include it also into some investment strategies, which wasn't easy in the beginning due to regulatory framework. This all had to be developed first, but we were able to do this starting in 2020 finally, and we decided to set up a strategy which includes gold and Bitcoin, because we think it is better from a risk-adjusted return perspective. But now we have actually two strategies in this direction. And yeah, so we also do believe in gold, and we think it will be playing a role for quite a while to come. But these assets have similarities, but they are also different to some extent, and that's why they're also are very complementary. Correlation is not that high actually. It's pretty low. It's roughly 0, which then again makes the perfect argument to include both of them in a portfolio, and that also basically enables us to achieve higher risk adjusted returns, which we've been able to prove actually since 4 years. So yeah, that's what I'm doing and where I'm coming from.
Thank you, Mark. And just to finish off, I'm the other guy. I don't actually manage a fund, but I invented, it sounds a bit grand, a benchmark, the BOLD index, which blends Bitcoin and gold on a risk-weighted basis, looking at volatility. So I think a lot of people here know about that. If you want to know more about it, then look up BOLD. It's a very simple strategy. So we're going to move on now, and I've got some questions that I'm going to ask. I'll ask my two guests, and obviously I'll get involved in the discussions as well. But starting with you, Mark, as investments, are Bitcoin and gold in competition?
I think increasingly, yes, to some extent. I would have said no, and we actually said no a few years ago when this became a topic, I'd say in the last bull run. But now, especially due to the upcoming of the ETF events, I would say there is definitely some competition. Although I think it's generally still overblown. It's been overblown by perhaps more a little bit the Bitcoin camp. I don't think currently this is something which has been discussed a lot, that there's a lot of outflows from gold ETFs into Bitcoin ETFs. This may be happening to some extent, but if you look at gold ETFs, they have been experiencing outflows for much longer time than since only the last few months, since when Bitcoin ETFs have been approved. And I think the main reason for that is increase in real yields. So inflation has been coming down and yields have been coming up, and this is traditionally the biggest competitor, real yields for gold. And I attribute the big portion of outflows of gold ETFs to the fact that we have real yields again, and this could change. This probably will change again in the future, but I think this is the bigger problem for gold. But that being said, I do think, especially in the medium term, people have now these options and these vehicles. So I think to some extent there is a competition. Yes.
So Larry, moving on to you, same question: are Bitcoin and gold in competition? Do you think?
Yeah, it's a great question. I mean, certainly they both, they're both forms of sound money. Gold is analog sound money and Bitcoin is digital sound money because of the algorithm. I mean, I think the answer is yes, clearly, because somebody who's trying to protect themselves against monetary debasement is likely to look at these things, and maybe also even to look at, the S&P. But I think it's important to understand, the context and the size of what we're talking about here. I mean, there are $350 trillion of fiat assets worldwide, stocks, bonds, currencies. The entire Bitcoin market is what, 1.3 trillion now at today's price, something maybe 1.2, I don't know, I haven't looked recently. And the entire gold market is maybe 12 trillion, of which only a piece of that's tradable. A lot of it's in museums and so forth. Excuse me. So the bigger competition is both of these two sound money assets against all the fiat out there. But I think it's correct to say that at the margin, particularly young people, they're not buying gold. I mean, they're not, if they're looking to protect themselves from monetary debasement, you know, they're familiar with and understand Bitcoin, they're much more likely to buy Bitcoin. And that's why we've seen this enormous growth in the Bitcoin ETFs. I mean, the ETF really opened up the playing field. You know, I would say before the ETF, it was slightly different, but after the ETF, we've watched, you know, just how rapidly and how easy it's been for people to choose Bitcoin as a choice. And this is very similar to what happened when the gold ETF came out, you know, in, what was it, 2003, Mark, or 2004, roughly?
2004, I think, yes.
Yeah, I mean, it was before that, if you wanted to buy gold, you had to go to a coin dealer, and of course, nobody was going to do that. But when you had a gold ETF, suddenly the interest in the category really grew. And of course, the price of gold really grew as well. So, but yeah, they do compete. There's no doubt about that. But they're slightly different. I mean, you know, let's keep in mind, we're going to come to this, I know, but let's keep in mind that gold doesn't experience 70+% drawdowns. And, you know, Bitcoin's had a handful of those. So, you know, in my client base, many of whom tend to be on the older side, you know, they may want some Bitcoin, but they're certainly not going to allocate all their capital to Bitcoin because of the potential for a drawdown.
Perhaps if I just may add, Larry touched already on that by alluding to the fact how large the fiat currency market is, or the let's say the asset market in general. But the question somehow implies that it's a zero-sum game, which is
Right.
not. So
Right.
you I think it's probably all of our expectation that you will have inflows from let's say fiat investments into sound money investments, and therefore it's perfectly possible, and it has been happening the last 10 years, that both assets rise in price because there's such a huge pool of other assets which have perhaps even been semi monetized, if you want to call it like that, because people have been searching for stores of wealth due to negative real interest rates.
I think that's right. I mean, it's important to emphasize that I'm incredibly bullish on both of these assets, but they look slightly different, and one may be, you know, one I think has more upside than the other.
I think that goes without saying. I think that, you know, from my perspective, the Bitcoin is obviously the risk on. It's got a lot of correlation with the NASDAQ and stuff like that. And gold, as Mark alluded to, is real yields and always has been. But it's got this big central bank buyer, which we'll come to. But it's, you know, something
Right.
that Bitcoin is yet to have. And at ByteTree, we track the flows. We've got a website called bold.report. And on that, you've got all the Bitcoin and gold ETF flows for all the ETFs in the world in those categories. And you can just see the money has been rolling out of gold since 2020, since August of 2020. And it never really went out of Bitcoin, but obviously it came in strong in Q4 last year in anticipation of US approval, and then it's carried on. Funny enough, January wasn't that strong, but February and March have been super strong, much better than expectations. And if you look at it and try and think, okay, how much of the impact of gold selling has been gone into Bitcoin, you'd probably think it's about 20%. Because as Mark also said, you know, the gold selling in 2020 and 2021, you couldn't see equal and opposite purchases in those Bitcoin and ETFs to offset.
Yeah, I think that's right. One of the things that I think is very interesting and very telling is that you've actually seen the gold ETFs decreasing, and there has been selling in them, and yet the price of gold is at all-time record highs. And so to me, a big part of the story about gold, I mean, you've got a bunch of different markets and buyers for these assets. And of course, with Bitcoin, there's only one sovereign that's bought it, and that's El Salvador, or that we know of, I should say, that's bought it. There might be some others, but that's El Salvador. In the gold case, what really is stunning to me is that in spite of, you know, ETF negative flows on the ETFs, the price of gold is hitting these record highs, and that can only be because of the sovereign bid. And so there's a lot of evidence suggesting, if you look at the shipments out of Switzerland, et cetera, that China, the Middle East, you know, many countries around the world are on, you know, Poland recently had a big purchase. They're on the bid for gold. So, you know, there's a lot of demand in the world that we see with, you know, with the out of control fiscal situation in the United States and surrounding the US dollar. There's a lot of demand for both of these assets, and but it comes maybe from different buckets. You know, the Bitcoin is more of the, investor aggressive bucket, not the sovereign one. And the gold is got a huge sovereign bid underneath it. And that's, to me, that's a very big tell that it's not going away.
I couldn't agree more. So let's move on to our next question for you, Mark. And I think this is one of your favorite questions. It's volatility. Gold has persistently had low volatility. Actually, it's not always true. In 1979, it was high. But Bitcoin has been persistently more volatile, but it's been coming down. Will this change?
Yeah, right. This has been discussed since Bitcoin has been trading, obviously, and I think the general view, especially from the Bitcoiners' point of view, is that volatility will consistently decrease and keep decreasing. If one looks at volatility over the years, yes, Bitcoin's volatility was substantially higher in I'd say in the very early years, which makes sense when the market cap was significantly lower, then you have higher volatility. But in let's say the past 5 years, I'd say, or even longer, 6-7 years, you haven't seen that much of a decrease in volatility, especially also, and I think that's even more important, especially not when it comes to max drawdown. We saw max drawdown, very similar max drawdowns during the last 2 bear markets, for example, in Bitcoin, and these bear markets happened with significantly different market caps also again. So that would suggest that volatility hasn't been declining that much lately. And I think there's also a fundamental reason for that, because gold has industrial use cases, a lot of them actually, and gold has this kind of buffer function because you have industry substituting gold when prices rise, and they perhaps will use more gold again if prices should fall. And on the other hand, you have got also scrap gold market, which increases the supply of gold again when prices rise. So this is like counter-cyclically measure. I think that's one of the reasons why gold actually has a lower volatility. Another reason is also, and perhaps if one puts not so much the Western perspective, but thinks about the global perspective. For instance, India, which has been traditionally been a huge consumer or hoarder, let's put it, of gold. These people hodl, if you want to put it that way. So they buy as much as they can. Like you can really see according to their purchasing power and the GDP. So if gold prices fall, they buy more, and if gold prices rise, they just can't afford more. That's why they buy less. And I think this is dampening volatility in a huge portion. And so then probably I think a very interesting question also now will be, how is the ETF approval going to basically affect the volatility? And my view is actually it will probably not dampen volatility. It actually could even increase volatility, because as fast as you can purchase these ETFs, as fast you are able to sell these ETFs. And typically, I think investors in ETFs don't have a hodling mindset. They have, perhaps a lot of them have more tactical mindset. And I think like down the road for the next bear market, we could be set up for quite a big drawdown actually.
Yeah, interesting point you make there about ETFs, whether they're good or bad for volatility. Well, they didn't put volatility up for gold or silver, and they were very, very significant. And they haven't put volatility up for stocks. So, I would bear that in mind. But I think your points are well made. But I think the reason I think gold's got such low volatility is because it's got a very, very large value buyer. The jewelry industry globally, they want a low price, they buy low. And the central banks, they just sit on the bid. They're all trying to accumulate. And, if Bitcoin had the jewelry market and the central banks, by God, the volatility will come down quickly. Larry, what do you think about that?
My dog was making some noise, so I muted myself. I apologize for that. So I agree with Mark. I mean, I think I think over time the volatility on Bitcoin will come down. I think if you study it, it's been subtle, but there haven't been, the first drawdown was 90%, and they've kind of gotten into the more 70% range, and perhaps will be lower, as it gets more broadly adopted. I mean, gold's got the benefit of 5,000 years of history and just an enormous and deep market and an understanding on the part of a large fraction of the 7 billion people on the planet that it's money and it's got value. Bitcoin doesn't have those advantages, 15 years old, and a much smaller percentage of the planet understands the use case and the value case. So, as the adoption gets taken up, you're going to see people, it's going to swing a lot, and probably for a number of additional cycles. I mean, Saylor says he thinks that kind of the next 10 years will be the period over which it will true out. And in 10 years, in 2034, 99% of the Bitcoin that's going to be mined will have been mined. Only 1% will be left. And I think the adoption rate will be much higher at the end of that point in time. And I think the volatility will come down just because there'll be a deeper market for it. But it certainly is volatile now, and that's a part of what has to go into everybody's thinking. My contention, some people say it's so volatile you shouldn't own it. A lot of the brokers in the US have made that mistake. And my view is no, the way it's volatility with an enormous upward skew. And so the way you deal with the volatility is you just select the right weighting. You don't put 100% of your assets. I mean, some people do, and that's fine. But the general investor shouldn't put 100% of their assets into something that's volatile. They should select a portion where they can handle the volatility. It adds alpha to their portfolio, and the drawdowns don't wipe them out. So it's part of what you've got to expect when you get involved with it. I mean, is volatility a feature or a bug? I mean, arguably it's a feature because it's what creates all the upside.
May I just interject? May I just interject two numbers here? I think it's quite interesting because I think total gold ETF volume is roughly a little bit over 1% of all gold, of the total gold supply. After 10 years since existence of gold ETFs, and after 2.5 months, total Bitcoin ETF volume is close to 4.5% of all Bitcoin supply. So this is huge, and if one is bullish on the further development of ETFs, which I guess all of us are, then this number could go up pretty rapidly to, I don't know, 10%, 15%. You tell me. And I think again, if I mean, a lot of people have itchy trigger fingers on their mouses, and it can be sold pretty fast. So just to bear that in mind.
On the volatility side, I just like to point out that Bitcoin's less volatile than Nvidia, and it's less volatile than Meta, and it's less volatile than Amazon and Tesla.
Interesting, huh?
So there you go. That's using 360-day realized. Okay, so Bitcoin and gold have got similar long-term objectives. I think we both touched on the idea they're monetary assets, but Bitcoin has a higher risk versus return profile. Starting with you, Larry, how would you allocate between Bitcoin and gold? I think you said earlier you bought Bitcoin, you're now at 12%, you've got some investments. Have you just arrived at that, or do you?
Personally, I'm higher than 12%. I mean, I've got my investments in my fund, I've got my investments in Bitcoin, and I'm over 60% Bitcoin today. I think every individual, there's no one size fits all on this, Charlie. I think every individual has to decide what the appropriate, how much they believe in Bitcoin and what the appropriate weighting is. Particularly, and I think it also has to do with your age and your ability to suffer a drawdown and not sell. I mean, that's the critical thing. I mean, I believe that Bitcoin is a multi-generational asset that you buy and hold, and it will go up for a long time. And really the two mistakes you can make with it. One is to not buy any, because then you're not going to get the benefit of it. And the second is to buy it and then sell it when it goes on a dip, because you don't really understand what you bought and why you should hang on to it. And so, I think you buy as much as you can comfortably hold, knowing that if it went down 50 to 70%, you wouldn't feel like you had to sell any of it. That's kind of the right allocation for people. And, I know 20 and 30-year-olds, my kids and other people, who are 100% Bitcoin because they believe in monetary debasement and they think it's the most asymmetric bet out there, and I do too. But I also know, folks who are 60, 70, 80 who are much more, conservative, and maybe they've got 20% of their assets in Bitcoin or something and 80% in gold, or some in the S&P 500. I mean, I think the one, we've hinted at it, but the one category I think that is, the sucker at this card table, as Luke Roman likes to say, is the bond market. I mean, I think we're kind of in an environment of almost assured monetary debasement, and therefore I can't understand why anyone would own any bonds other than perhaps, for cash management needs, you might, have some 2 or 3 month bills that pay you 5% because it's better than getting 0. But any long duration bond to me represents a very bad bet.
Couldn't agree more. Mark, what about you? How do you do allocation between Bitcoin and gold?
Well, again, I think Larry had a lot of smart things to say here, and it's a very individual thing how to structure one's portfolio. Me personally, yeah, I'm not as aggressive as Larry, but I try to rebalance. I mean, I like rebalancing generally. So whenever Bitcoin performs well, take profits and rebalance into other assets, and that's what we do in our funds as well. So you reduce your volatility, and you also are able to take advantage of Bitcoin's high volatility, in fact, and that's what we're trying to do with our strategies, and that's what I do personally as well. Just another thought regarding portfolio allocations. I think it's also obviously a question of the amount of wealth which one is talking of. So if it's really like a family office, if it's really the value preservation is the first idea and the most important objective, then obviously the allocation would be more tilted towards gold. And if one wants more capital appreciation, one probably, it makes sense to have a higher Bitcoin allocation. This probably also correlates with age typically. So I think, yeah, Larry already put it out pretty well.
Because basically it's the same principles as how we think about bonds and equities. Obviously,
I was going to say it's very common. It's very much in line with the way we used to think about bonds and equities. The problem is bonds are now worthless, so you can't do that anymore, right?
Yeah, well, there's always inflation-linked bonds. At least you're at the front.
Yeah, but they cook that inflation rate, so they don't really work that well.
Well, there's that too, but that's another conversation.
Yeah, right.
We could do an hour on that. I'm just going to mention briefly the Bold Index. It allocates with a very, very clear strategy. We look at last year's volatility, and for Bitcoin, it's something like 40%, let's say. For gold, it's something like 15%, and we invert that. And you end up with 3/4 in gold and 1/4 in Bitcoin. We rebalance that every month. And the beauty of rebalancing transactions is you keep your risk constant. So if you're an institutional investor, you would care about that. A private investor might care less about that, or they might choose to rebalance less frequently after big moves or something. But there is an alpha associated with rebalancing, and we calculated about 5 to 7% per year. Much bigger than you'd think. And the reason it's so strong is because these assets have low correlation, which Mark talked about earlier. If you did it in French and German equities, there'd be nothing. If you did it in gold and silver, there'd be nothing. You do it in Bitcoin, and there's some magic that comes out of the mix.
I'll bet. Yeah, I'll bet.
So that's the rebalancing thing that we quite like. And I know Incrementum like that too. So we'll move on. We're now getting to the governments and regulators section. So everyone's going to have to behave themselves or misbehave themselves, is your choice.
Yeah.
Why are governments and regulators generally comfortable with gold, yet uncomfortable with Bitcoin? We'll start with you, Larry.
Wow. Yeah, that's a loaded one. Well, I mean, they're comfortable with gold because they manipulated it, and it hasn't made them look foolish the way Bitcoin has. And it's been around a long time, and there was a time when they weren't comfortable with it. In the US, you couldn't buy it before 74. So they've always had a love-hate relationship with gold, but they let it exist. I mean, Wall Street hates it because they don't get any fees off of it. I think that, Bitcoin, I think that the smarter governments are aware that it's an existential threat to the currency that they print, and the currency they print gives them a lot of power. And that's why I think you have the Elizabeth Warrens of the world and others attacking it, knowing that it's not good for the game they're playing. It doesn't serve their interests. Gold threatens that too, but gold's been demonetized for so long, and 70% of the accounts in the world have 1% or less, in gold, and so they've already kind of whipped gold. I mean, they beat it, and so they don't have to worry about it. But this new Bitcoin animal is a little bit more threatening to them because it's working, and they haven't learned how to manipulate it. And so, you know, having control of a fiat currency gives you a lot of power. I mean, the United States has been able to live off the rest of the world as a result of the US dollar's reserve currency status. And they like that. The people who run the country like that. And the people who run the financial system like that. And so, you know, it's not surprising to me that many, if not all of them, are hostile to Bitcoin. You know, the ones who've jumped ship have only jumped because they figured they could make a lot of money off it, like Larry Fink at BlackRock. But if you look at the Jamie Dimons and the Elizabeth Warrens and, you know, most of the people who are in position of power, Janet Yellen hates it. You know, Jerome Powell hates it. My sense is they all view it in a very negative light because of what it means for their business.
Yeah. And to you, Mark, governments and regulators, Bitcoin or gold?
Well, from the European perspective, continental European perspective, perhaps, it's actually quite interesting. I think it's not very well known. In the Eurozone, actually treats gold pretty favorable. And I think that was initially part of the Germans before actually they actually negotiated the single currency, the euro. It is in the whole Eurozone, you can purchase gold without any VAT. And you can actually also, I think in most of the countries, can sell it without any capital appreciation taxes, at least after a year's time holding period, which, given the general repressive environment, I think is quite remarkable that it's still like that. And I think it was the idea of some smart people who wanted to give probably Germans back then kind of emergency exit of the currency in case, who could have known, it becomes too inflationary. So this is here still when it comes to physical gold. So I mean, that's, I think one has to appreciate that. So the government regulation in that sense is not even that unfavorable to gold. When it comes to Bitcoin, well, I think people have been grasping how to treat this. I mean, European regulators, I think, did a way worse job than the American regulators, because they weren't able to basically see this as a different animal. They are treating Bitcoin pretty equally to all the rest of cryptocurrencies, more like a security, which is a very big blunder in my view. But I don't think that regulators really understand even monetary debasement that well. This is such a huge bureaucratic monstrosity which has built up there, and everybody has their little tiny view. I don't think a lot of the people there actually see the big picture. Yeah, that would be my view. I think it's really like taking a path of its own, and yeah, it unfortunately has been regulated quite heavily in Europe. That's my view.
Yeah, I mean, here in the UK, you can still buy British gold sovereign coins, and they're free of capital gains tax, and that's been true for quite some time. The ETFs, we were second to get the ETF away in the end of 2003 after Sydney. But then when it came to the Bitcoin ETFs, they're still banned here. They weren't banned before October 2020, but then they were banned on that day, which was implemented on the 6th of January. So the announcement of the ban was $10,000 Bitcoin, and we're now just touched recently $70,000 Bitcoin. So it's quite an embarrassing situation for a regulator to be in. So I don't know how they reverse that, but you know, I think that it's a bit of a nightmare for Bitcoin to work, to succeed for all regulators, because even if you haven't formally banned these products in the like they have in the UK, they've been shadow banned in many countries. Larry was saying earlier that even many of the major brokerages in America won't give their clients access to these products. So it's not just the law of the land that's causing the problem. Can I ask for lots and lots of questions to come in, because we're going to the audience question section next, please? Is Larry, are you answering them? We're going to be
I've been trying to answer some of them as we've been talking, but
okay, fine.
happy to go back and talk further about them.
We've got one more question for us, and that is that the central banks own 37 tons of gold, worth $2.6 trillion, 17% of the total 15 trillion. What would need to change for central banks, excluding El Salvador, to buy Bitcoin in material size?
Yeah, I'll go first. I mean, I think just more awareness of the asset and what it is and what it means, and more kind of political acceptance in certain places. Let me say this: I tend to believe that there are actually, I mean, Jason Lowry, who is a Pentagon official, a U.S. I guess he's an Air Force officer, and did a lot of work on studying the strategic implications of Bitcoin, suggests that there are parts of the U.S. government even that fully understand the strategic importance of owning Bitcoin. And I think that, there's a possibility that, China and perhaps even Russia, some of the Arab states are mining coins, and that they're beginning to look beyond. I mean, let's go back to first principles. We know the monetary system is kind of broken, and that it's headed for a train wreck at some point. We don't know exactly when, but Stein's law kind of applies. You can't grow debt faster than GDP without having something break. And had Bitcoin not existed, the go-to default asset to solve that monetary crisis like they did in the early 1900s, and they have every time historically, would be to reset the price of gold. And so gold has historically been the solution to that problem, but now you've got this digital gold, and I think some countries are smart enough to understand what the implications of that are. And I think we will see more El Salvadors, probably some smaller countries, maybe at first, but I think it's coming in the next 10 years. And so, that will have an enormous impact, because, you kind of, one of the things that will happen here, I believe, is you're going to have game theory. I mean, let's take the Michael Saylor example. Here's a company that is using Bitcoin as its reserve asset, and has got this enormous premium in its stock, which he's able to then sell and buy more Bitcoin with. There are a lot of companies that have a lot of cash on their balance sheets, and as they come to see that Bitcoin is an alternative, a useful alternative for storing their cash, you're going to see them. They're going to jump in and do what he's doing. And so I think that same game theory will apply to countries.
Thank you, Larry. Mark, when is Liechtenstein Central Bank or the Swiss National Bank, when are they going to buy Bitcoin? And then we'll move on to audience questions.
So Liechtenstein has the Swiss franc, so no central bank here. But Switzerland is quite an interesting case, actually. I don't think they will buy it so soon, but I think now two years ago, at the last general meeting of the Swiss National Bank, there was actually an official request from a group of their shareholders, because Swiss National Bank is actually a listed company, so you can buy stocks, and if you have got some stocks, you can actually give a official request on the general meeting, and some of the shareholders of the Swiss National Bank did that. And they proposed that they should invest 1 billion Swiss francs each month into Bitcoin, and asked the board why they are not doing that. And the answer was quite interesting. I mean, they gave all kind of like the answers which you would think. It's too volatile. It's but what they also said at that point, it is too small, was one of the reasons. So that's been changing lately, and it's not liquid enough. That's been changing lately. But they also did say that they would actually be able to do it. So it was a no, it was a clear no, that they're not planning it or anything like that. But then again, if one wants to read between the line, it was no category no. So again, I'm not expecting that they will do it anytime soon, but I do expect a group of people going back to them now 2 years later, referring to the request 2 years later, and they will go back probably each year. Yeah, so that could have an impact down the road.
That's pretty interesting. Just that it was discussed. Do you know what I mean? I mean, they didn't do anything, but it was actually talked about, right? That's big in and of itself.
Yeah, I mean, these were obviously Bitcoiners who bought a few stocks and then and went to well, that was a great initiative, and I think they are doing a good job, and they probably will be consistent in this regard.
Great. I'm going to move on to the questions now from the audience, and keep them coming in, and we'll fly through these. Gentlemen, can I ask you to put your hand up if you want to answer it? I'll read it out. But the first one, put the hand up, they can take it. And from Will Nutty, author of Nut Stuff and fellow guards officer like me, how does Bitcoin tell the time successfully across time zones? Gold doesn't, but it does to order transactions. The Fed database does, the dollar on its own doesn't. Not quite sure I'm fully understanding, but I think you're talking about the 24-hour nature of Bitcoin and the time zones and the liquidity cycle and so forth. Gold has the London fix. Anyone want to pick that up?
Yeah, I think it's just, I mean, it's programmed in that you know, as everybody knows, they're searching for blocks, you know, every 10, and they're trying to maintain an average block time of 10 minutes, and so, you know, all the nodes are interconnected, and there's a mempool that everyone's on, and there's a clock running on the mempool, and so you know, it's coordinated because it's all real time, you know, networked on the internet. So I don't think time is really an issue. I mean, other than so far as, you know, how long it takes to form a block, and that's variable. I mean, you see every now and then somebody forms a block in a minute or two, and then the next one takes 15 minutes, but you know, the halving is designed to average that out so that on average the blocks are being formed every 10 minutes. So time's really not an issue with Bitcoin. I mean, it's interesting, as Jack Mahler's described it in you know, in Madeira. I mean, really, that's what Bitcoin is. Bitcoin's a time machine. It keeps track of time. It keeps track of money or a ledger entry over time in 10-minute increments.
We've got the next halving, haven't we, in 31 days or 29 days?
And yeah, mid-April. Yeah.
Looking at the 19th is
that what they're projecting? Yeah.
Yeah, and I was just looking at some of this data today, and there's a question earlier about the fees, and the fees were going exponential until Taproot came in 2021, and the fees this epoch, the last 4 years, have actually been lower in Bitcoin terms, have been lower than the previous cycle. And there's one thing I did want to mention, was that the first halving cycle, supposed to be 4 years, was 35 days early in 2012. The second one in 2016 was 141 days early, which means that it was far too easy to mine Bitcoin. Then in 2020, it was 58 days early. And this one, we're looking like we're going to be 21 days early. So your clock is nearly right, Larry.
Yeah, I mean, it's obviously there's a little bit of variability because it's unpredictable. But yeah, it's really kind of an amazing system. Whoever designed it was a genius.
She was great. Mark, I'm going to take this one to you. Surely only a matter of time before the ETFs are approved in the UK and Europe, and pension funds in the UK can invest via SaaS. That's a bit of a technical point. That's a tax wrapper which companies can do for their pension funds. So UK and European regulation, it's the same thing, by the way. Brexit never happened. What do you think, Mark?
I think there's a little bit of a misconception out there when it comes to at least Eurozone. I can't speak to the UK that much. So the ETFs will not be approved in the European market due to the fact that the European fund framework actually says one has to have some kind of a diversification in a fund vehicle, right? So you will never have that in a one single asset fund, but there's kind of a workaround. It's called exchange traded commodities, ETCs, which are a note, which is not a fund, but you can actually, I think, take care of the collateral problem pretty well. And there are several ETCs have been listed already, and I think more than 2 billion euros of volume in Bitcoin ETCs. So this has actually already been possible for quite a while. But it's not a fund structure, it's a node structure, but it works pretty well. And caveat, Switzerland is different also in that regard. Switzerland, you can actually invest in the US ETFs because they have their own regulation. So it is possible already.
The Swiss have much more financial flexibility these days than most others. So here's a good question from Anonymous. On the question about the ETFs, are ETFs at odds with the fundamental reason for the existence of Bitcoin?
I mean, a little bit yes and no.
Can I take that one, Larry?
And, okay, go ahead. Yeah.
Yeah, and the reason I'm going to take that one is because I've been a big ETF fan for 20-something years. And they just are the most fabulous vehicle, not just for private investors to get access to different markets. You know, imagine trying to buy 50 different shares in Brazil. 20 years ago, virtually impossible for most people. Now it's one touch of a button. And esoteric assets like gold and Bitcoin, which, let's face it, they're difficult for people. Some people are very comfortable with putting Bitcoin on a wallet, and some people are very comfortable having gold in a vault, but a lot of people aren't, and they just want to keep things simple and in their broking accounts. So, I think it's the choice. You do what you want to do. I mean, you've got anything to add to that, Larry?
Well, I was just going to say that being self-sovereign is obviously better than owning an ETF. I mean, I think part of what he was getting at there with the question is, you're in the system. When you buy an ETF, you're in their system. And Bitcoin was designed to get out of their monetary system, right? You own your own keys. Nobody knows what you own. Nobody can tax you, see it, et cetera. It's all private, it's private. I mean, it's pseudonymous, but unless somebody knows your addresses, they don't know what you've got. And so yes, I mean, the ETFs are slightly different, but I think they're in general, on balance, a net good thing. I mean, I don't personally advise anybody to own the ETFs, because I think that there is some chance that as things get rougher in fiat currency land, that they might decide to be more aggressive about taxation or about disclosures or whatever it might be. So I advise all my clients to be self-sovereign, to get their coins into cold storage, for the obvious reason. But so there is a little bit of a conflict. But having said all of that, the ETFs are an enormously positive development for the asset and the asset class, because, frankly, they allow a lot more people to access it. And that's a good thing. And it makes number go up. And the more number goes up, the more people pay attention to it. And, what we're trying to do is get Bitcoin to be an alternative form of currency, to the broken fiat currencies that exist in the world today. And so the more people that we can attract to it, the better. And if ETFs attract people, that's a net positive. So I think they're a big net positive, but they're not the ultimate solution, in my opinion, in terms of the way one wants to own their Bitcoin.
Of course, and there is a threat that the system could say, I want to have your Bitcoin, gold, and so forth. But that's true to your fund as well as it is to an ETF. It's truly.
Absolutely. No, it's true for everybody.
Mark?
Yeah, I just wanted to add some theoretical thoughts still also here. I mean, as Austrian and proponent of the Austrian school, I like to just point out this like very basic idea from Karl Menger, who's the father of the Austrian school, and he says the most saleable good ascends to money. And I think one thing which is really great about the ETF is it's a huge boost for liquidity. So and this again, I mean, also fits in very well to what we already have discussed. When will state actors invest into Bitcoin? They need liquidity, right? So I think this boost of saleability, if you want to call it that way, this is a great thing. This is a great thing for Bitcoin. So I think one should be quite happy about it, that this is actually happening.
I totally agree. Liquidity is a very important part of valuation, and I've done some work on gold on this. And I'm very happy to say that gold is a $2,000 asset per ounce, But without the ETFs, without the liquidity, it's probably the gold, the metal is probably a $500 asset. It's perfectly okay to talk about monetary premium, and Bitcoin has a monetary premium that's going to be very, very big and closely linked to its liquidity. Binance in the UK does not allow you to sell and cash out in pounds. Coinbase still allows you to do this. Yeah, okay, don't know. We're talking about Bitcoin and gold. Sorry, that's if you're one of my readers, put that into the letter and I'll research it. Back to Will Nutting. Can you talk about the next iteration of Bitcoin as it becomes usable as a currency, not just physical gold or a casino asset? Do you have views on the smart contract rolls out, all that? So this is the thing, that people in financial service industry, they're desperate for a use case other than monetary asset. It's got to do something like make ice cream or, buy coffee or something like that. Larry, I know you'll have a funny answer for this one.
Yeah, sure. So, I mean, look, its primary use case right now is store of value, right? I mean, just like, and you don't buy ice cream with gold, you don't buy ice cream with Bitcoin. And so that is the primary use case. Having said that, there are a lot of things going on technologically that will make it more currency, quote unquote, like over time. And it'll make it easier to take it and use it for those kinds of transactions. And what I'm referring to specifically, and people should research, is the Lightning Network, which is a layer 2 application that sits on top of the base chain that for very, very low transaction fees allows you to conduct transactions. And so what I would suggest is that those things are coming, but they're not here today in any kind of scale. I mean, Lightning works, but in a small scale, not in a big scale. And it'll be a couple of years, I think, before that grows. But I do see the possibility that over time, and I do believe at the end point here of all of this is that ultimately things will be denominated in sats, that this will become the premier form of money for savings, and that will then lead to it being the preferred form of money for everything. I mean, for a long time, you'll be converting from Bitcoin to dollars to do transactions, but I think it's possible at the end state that the dollar goes away, and that sats, everything is priced in sats.
May I add something to that? I think a huge part of its use case is being able to store this property in one's head with 12 or 24 words, right? So this is already a use case. Another thought which I very often discuss, and I'm sure you two of you know these kind of discussions. I think it's also a mental leap which one has to take. If one accepts, for instance, coming from a gold investor's mindset, if one accepts gold has a monetary premium which is significantly high, I'd argue, and I think that can be shown pretty easily. If one accepts the premise that there is something like a monetary premium, then that's the first step. But the second step is, does it have to be kind of physically, is this kind of industrial use case needed to enable to have a monetary premium on top of it? And I think, as I said, it's I think a mental leap to kind of accept, no, it probably doesn't have to have a physical use case, but perhaps different use cases. And the asset actually can exist of 100% monetary premium, because that's what it is actually. It's not that easy to kind of take this leap, but I think if perhaps it's helpful if one just looks at gold, how actually big the monetary premium is relative to the industrial use cases which it's used for right now. And if one accepts the fact, okay, it could be the case that an asset exists of only purely monetary premium, then perhaps it's a little bit easier to take this leap.
I mean, it is found there are so many conversations about money and trying to understand it, and studying the history really helps. And you think of all the many different roles that gold's had, particularly being a financial technology back in the day before telecommunications. And one of the reasons, you take gold to the other side of the world and it's gold. It works. And then they decided just to leave it in the vault and have paper to represent it and have a credit system. And it's come back this time in the 21st century as without a rule book. No one said gold is the money of the central banking system. It's come back, especially since 2009. More the other side of the world, the developing world, than the Western world. But they've chosen it. No one's written down why. It's just come back to be. It's such a natural place for gold to be money, and Bitcoin's coming in saying, well, actually, there's a role for us too. And John Grosnek is a friend of mine who says, he doesn't want to plug, but have a look at the Bitcoin way if you want to do self-sovereignty. I haven't suggested that's a good idea or not, but there's his plug. I'm sure he'll be happy about that. How do ETFs work when the exchanges close? Surely there's volatility, same as the stock market. The stock market closes at night and at weekends. The ETFs are open when the stock market's open. Will Nothing's back with the block time. 10 minutes per block is how the self-system tries to regulate. If the blocks are happening too slowly, then the miners turn the electricity on harder and run more machines. In 2021, April, China switched off 40% of the world's mining, I think it was, in a heartbeat, and the system came under pressure. So there was a good lesson, and then the system, the whole of the blockchain slowed down. But within 3 weeks or 4 weeks, it was back to normal. So we've had the mega test with literally half the world's mining being switched off unannounced. We've got a thank you. For a younger person, 30 years old, how would you think about gold Bitcoin allocation? Larry, you're the youngest person here.
I don't think that's true. I think Mark's younger than me, but look, I think younger people, I would be very heavily on Bitcoin. I mean, I think Bitcoin is going to outperform gold, and you know, I've often said I think the purpose of gold is to bribe the border guards when you're leaving the country. You know, so I think if you're young and you can handle the volatility, Bitcoin is a better choice. That's my view.
Okay, Mark, to what extent is the halving priced in? Is anything ever priced into financial markets?
Yeah, I mean, I remember last halving very well, where we were discussing exactly this question, and it turned out to be not priced in. And now we've got the next halving coming up. Plus, we had a very good run, not only this year, but last year, which was actually remarkably good. If you take the 4-year cycle, it was, I think, the best calendar year after Bitcoin's fourth bear market year. So one can either argue, okay, a lot of performance has already been priced in, or one can also take the opposite view, I guess. One can argue, well, if the first year of the good years was already that well, we could have a super cycle, you know. So very difficult. But I do think the ETF events are a game changer. And I think the story is not over, obviously, yet. So a lot of capital on the sidelines still. A lot of institutions which are very slow in deciding and taking these kind of decisions, which huge amount of capital to allocate. So I would tend to argue that the best is yet to come for the cycle.
Good, and a really important point about the whole halving thing is where fees end up in the future. This is one of the unknowns. But I think, you know, it's probably about the only thing that unsettles me is how you pay for the system in 30 years' time. But if you think of the gold, the inflows to the gold market, so it's 2% of gold is mined each year, and that's $250 billion. And at the moment we're seeing $15 billion going to Bitcoin. So actually, if Bitcoin's gold, there's 10-15x more money to come in every year. So that's quite exciting. And then we've got, is there a portion of altcoins allocation within Bold and Bitcoin ETFs? Who could be the rudest about altcoins here? I think probably Larry.
Yeah, I consider, I mean, I'll try and be fair. I mean, there might be some interesting use cases and technology associated with the altcoins, but from a store of value point of view, I'm not an altcoin fan. I mean, I refer to most of them as kind of shit coins because there was so much, bad stuff that happened in the altcoin world. I think some of the use cases and the things they're doing with smart contracts will have value, and they may get built on a layer 3, Bitcoin, or layer 2. But I don't mess around with altcoins. I don't think there are any altcoins in the Bitcoin ETFs, but I know there aren't any. And and generally speaking, when people talk altcoins, I advise people to stay away.
I mean, to be clear, we cover altcoins here at ByteTree, and we do a very good job of it. But altcoins do not find their way to in bulk, or we do not consider them monetary assets. We consider them to be, crypto tech stocks, and that's fine. So if you put that crypto tech stock hat on, that works. On the reg side, there are European crypto basket products, but there aren't any in America yet. But I gather Ethereum is coming, so that's the start of something. Then we've got 2 more questions to go, so no more questions, please, gentlemen. We'll just finish off these 2, ladies and gentlemen. I beg your pardon. So Fort Knox, the anonymity of the Bitcoin blockchain. If a central bank tried to accumulate a huge position, I mean, you'd be found out in 2 minutes, wouldn't you? Because
I think so.
Secret. Yeah.
Yeah, I think so.
And then the last question: quantum computing. Okay, here's a good one. This is quite a scary one, isn't it? This, so this sort of means a computer's so powerful it can guess all of our private keys and
yeah. I mean, look, I've talked to physicists and comp sci people, and I don't think this is a 0 probability threat, but I don't think it's in a 10-year window, and that's I kind of invest for a 5 to 10-year window. I don't think it's a high probability threat in that time frame, and so. I think it's something we have to keep our eyes on, and who knows, it could surprise us. There could be developments that surprise us, and if so, that might change, the risk reward calculation here. But right now, I think we've got at least 5 years of very low probability that any kind of quantum computing does anything to mess up this system. That's what I've been told, and it sounds right to me.
I think we'd have bigger problems in the world if the computer started attacking us in every direction.
Well, there's that too.
Right, well, it's going to round off now, but I'm going to give Mark, please tell us how the audience can find out more about you and what your products and so on.
So all of our products can be found on our homepage. It's incrementum.li. I'm on Twitter at Mark Valek, and happy to engage with all of you.
All at the same.
Yeah, in my case, I'm on Twitter as Lawrence Lepard. I'm pretty noisy on Twitter, a lot of stuff about the central banks. You can find out I'm involved with 2 funds. One is the core EMA fund, which is gold and Bitcoin. I'm also involved with the Bitcoin Opportunity Fund, which is all Bitcoin and Bitcoin venture deals. And you can learn about both of those at my website, which is EMA Edward Mark Alpha, the number 2.com. And I also publish a free quarterly newsletter. We'll never spam you if you sign up for it, which kind of talks about the macro conditions every quarter that we think are driving the trend toward these 2 sound money assets.
Good. And I've read both of their work. Larry's I've only read recently, but I've been reading Incrementums for many years, and I commend both of them. They're quite excellent. Last question before I let you go. And this is a question that's asked by a British journalist on Bloomberg podcast every week, Maren Somerset Webb. And she says, and every guest gets this question: if you had to put all of your assets into either gold or Bitcoin for 10 years, which would you choose?
Yeah, that's an easy one for me. I would choose Bitcoin. I think it is superior to gold, which is not to denigrate gold, because gold's going to work too. But I think you've got 2 things going on. They're both going to benefit from monetary debasement. We know that. But more importantly, Bitcoin is undergoing an adoption cycle. And, like the Malcolm Gladwell tipping point, I don't think we're even at the 10% ownership, world ownership of Bitcoin. We're well below that. And I think as this cycle grows, the rate of adoption is going to increase, such that in 15 or 20 years, everybody has Bitcoin, knows what it is. It's a standard savings technology, and so as a result of that adoption cycle, I think the asymmetry and the fixed number of coins, I think the asymmetry here is just there really hasn't been another investment like it in my career. I fully expect these coins to appreciate by 10x and then by 10x again. I mean, this is over a period of many years. This isn't quickly. This is give me 5 years, 10 years, but I really think we're in the point where Bitcoin is going to outperform gold by a large measure. So if I had to pick one of the 2, I would pick Bitcoin.
Thank you. I'm not surprised by that answer at all. Mark, what are you going to choose, Bitcoin or gold?
I'm tempted to say something very similar, but for the sake of the fun of it, I'm going to pick gold. Thank goodness it's only a hypothetical question, but I think the advantage with gold is I wouldn't have to look at the ticker that often during these 10 years. And I would be able to sleep very well. I have a lot of confidence in Bitcoin, and I'm sure it will be around in 10 years. But there are some scenarios which are not 0% regarding to Bitcoin. So if I have some kind of wealth which is protectable, which will give me some significant standard of living in 10 years time without huge worries, I think the argument is to be made also for gold, and that's why I'll pick gold here.
So that leaves me with a casting vote. And
yeah, how about you?
Copied my answer. My answer is, the risk adjustment here, and the bold index is 75%. Well, there's 25% Bitcoin. So I have to go with the majority. But it's also this idea: do you want to panic those 10 years? Maybe you're on a desert island, or I don't know where you are, in prison or in space, whatever that scenario is. And I'm going to be sitting there panicking that whether I've gone back to a fortune or nothing with Bitcoin. Whereas in gold, I just know I'll sleep at night and it'll be fine. So I guess that maybe I just lack ambition. Maybe that's the problem.
Well, they're both going to do extremely well. I mean, that's the thing to keep in mind, that, we're just talking about, what flavor do you want, really?
So, gentlemen, thank you so much. Really, real pleasure to have you have this discussion. And I can't think of two people I'd rather have it with. There really aren't many people that can have this discussion at a high level. So thank you.
Thank you, Charlie. It's really nice to be with you, and good to see you again, Mark. We're all on the same team, and it's getting interesting now. Both of these assets recently touched record highs, and the other side has to notice this, right? And so it's gonna. I think we're going to be pleasantly surprised by how well these two assets do in the next 2 years.
Likewise, Larry. Thanks for the invitation once more, Charlie, and good talking. Thank you.
See you soon. Bye-bye.